As of right now, on this Monday, June 1st, 2026, during active intraday trading, BigBear AI Holdings is trading at $5.04 per share, showing a minor dip of about 0.79% from its opening price of $5.08, though it is maintaining massive support after an absolute monster of a week where it surged over 20%. Now, the obvious headline that everyone is staring at is this recent explosive upward movement, but the hidden detail that almost nobody is talking about is how this small-cap defense contractor quietly eliminated 90% of its toxic debt and completely reconstructed its internal profit margins through a critical software acquisition. If you were just looking at the top-line revenue numbers, which actually showed a tiny drop of less than 1% year-over-year, you were completely missing the institutional accumulation happening behind the scenes on major trading platforms. Smart money isn't buying this company for what it was last year. They are accumulating shares because the underlying asset is completely shifting away from low-margin consulting services toward pure, high-margin software infrastructure. The standard consensus surrounding BigBear AI on popular investing sites and retail forums is that it is just another volatile speculative microcap ticker riding the coattails of larger defense and tech giants. The common expectation is that without massive immediate revenue growth, a company of this size will eventually dilute its shareholders to stay afloat. But the ground reality is starting to challenge that narrative in a major way. When you open your individual brokerage account or check your positions on the Robinhood mobile app, you are looking at a business that has historically struggled with lumpy government contracts and severe margin compression. However, the data reveals that the company just expanded its gross margins by a staggering 1,278 basis points in a single quarter, pushing them up to 34%. That kind of sudden internal efficiency is not accidental. It is the direct result of a calculated pivot away from legacy consulting work and towards scalable proprietary platforms. To understand why this stock is suddenly among the top trending names across social sentiment trackers, we have to look closely at the massive trading volumes and institutional activity that occurred over the last few sessions. Retail investors using the Interactive Brokers trading platform and active traders on SoFi Invest noticed a massive influx of volume that pushed the stock up over 20% last week alone, marking its best weekly performance in 8 months. This wasn't just retail hype, it was driven by a major operational announcement regarding their first commercial deployment of an international shipping compliance platform with the Panama Transshipping Group. This represents a monumental shift for BigBear AI because for the first time they are proving that their software has deep, practical utility in the commercial logistics space, rather than just relying entirely on the slow, bureaucratic procurement cycles of the United States Department of Defense. The tension between what the public expects from this stock and what the actual balance sheet is showing has created a major pricing mismatch that active investors are capitalizing on. If you look at older reports, this company was bleeding cash and burdened with high debt costs that made self-investing look incredibly risky. The reality of 2026 is that management has aggressively cleaned up the books, clearing out prior liabilities and building a firm cash position that drastically reduces the threat of near-term dilution. For anyone managing a self-directed portfolio or utilizing online investing tools like Schwab Intelligent Portfolios to balance out speculative tech plays, understanding this specific turnaround is critical. The market has been treating this ticker like a failing government contractor, but the institutional buying patterns on platforms like the Fidelity trading platform suggest that a breakout above the key resistance level of $4.30 has fundamentally altered the technical chart, turning previous resistance into a strong accumulation floor. Let us step back for a moment and look at what this business actually does to understand why these structural changes matter so much. Founded originally back in 1988 and later hitting the public markets via a merger in 2021, BigBear AI operates in a highly specialized niche known as decision intelligence. They don't build generic software for everyday consumers. They build advanced data engineering, machine learning, and cybersecurity solutions designed for high-consequence environments where speed and absolute security are mandatory. Their core tools allow clients to integrate massive, completely fragmented datasets, run discrete event simulations, and perform real-time tracking of inventory and logistics. Historically, their primary customer base has been heavily concentrated within the federal government, including national security agencies, homeland security, and the aviation sector, where they deployed biometric verification software at major airports. The major bottleneck for the company has always been the low-margin nature of their legacy IT service management contracts. A couple of years ago, their profit margins were compressed down to just over 21% because human-intensive consulting work is incredibly difficult to scale efficiently. To fix this, the company executed a major strategic pivot by acquiring Ask Sage, a highly secure generative software platform for $250 million. This acquisition is the exact reason why the margins suddenly expanded so aggressively in the latest quarterly report. Instead of selling billable hours of consulting time, they are now selling high-margin software licenses that plug directly into existing federal workflows. This means that even if their total revenue looks temporarily flat on paper, the quality of that revenue is vastly superior, flowing straight down to improve their net income profile.
At the same time, the macroeconomic pressures of high card interest rates and tightening credit markets have forced smaller tech firms into bankruptcy, but BigBear AI insulated itself by wiping out nearly all of its heavy debt obligations. This has completely shifted the risk profile for investors tracking the stock through advanced online investment dashboards or adjusting their holdings within automated accounts like the SoFi robo-advisor. When you look at their massive backlog, which has now grown by 14% to a substantial $281.9 million, you can see a visible runway of guaranteed funding. This backlog includes a massive $53 million sole source award from national security agencies, meaning the government specifically chose them without even opening up the track to public bidding, proving just how high the switching costs are for their core clients. Comment below how many shares of BigBear AI you currently hold in your portfolio, or if you are entirely avoiding small cap defense stocks right now. Hearing your perspective on these smaller infrastructure plays helps paint a clearer picture of where retail sentiment is actually shifting. Looking ahead, the future outlook for this company depends entirely on whether they can maintain this delicate balance between high-margin software expansion and the execution of their massive contract backlog. The near-term catalysts are clear. The market is waiting to see the full financial integration and synergies of their recent logistics acquisitions, as well as upcoming federal budget allocations for defense software. There are still major risks that you cannot ignore if you are tracking the stock on the Robinhood app or through your individual brokerage account. The short interest on this stock remains notably high at around 25%, meaning a significant portion of the market is actively betting that this operational turnaround will falter. Furthermore, historical contract lumpiness and past financial restatements mean that the company must deliver flawless execution in their upcoming quarterly updates to completely win over skeptical institutional analysts. If we look at potential downside scenarios, a sudden delay in government contract funding or a failure to expand further into the commercial shipping and logistics sector could easily stall this upward momentum and push the price back down towards its previous consolidation zones. On the flip side, the upside opportunity is driven by the reality that the stock is still trading well below the average long-term target set by the few Wall Street analysts who actively cover it. If the commercial deployment in Panama proves highly successful and leads to broader adoption across international trade hubs, the company will have successfully decoupled itself from being just a domestic government vendor, unlocking a completely new stream of recurring corporate revenue that the market has not priced in yet. To bring this all together, the central insight here is that the common market expectation for BigBear AI is lagging far behind its structural reality. The public narrative treats this ticker as a highly speculative, debt-laden small cap that is entirely dependent on market hype. The financial reality, however, shows a business that has drastically restructured its balance sheet, expanded its gross margins by over 12% through targeted software integrations, and built a massive backlog that provides long-term operational stability. While the stock remains volatile and faces intense short seller pressure, the underlying fundamentals suggest that the business is quietly executing a fundamental shift towards higher value infrastructure. Whether you manage your capital through traditional platforms like Fidelity Investments or active trading accounts like Robinhood, keeping a close eye on how this expectation versus reality dynamic plays out over the coming quarters will be essential for navigating the highly competitive landscape of defense technology. Disclaimer: this video is for educational purposes only, not financial advice. Please do your own research before investing. Market involves risk. Like this video, comment your thoughts, share with your friends, subscribe for more updates.